If you have ever felt confused by the market, entered trades with confidence, and still ended up getting stopped out, this video is going to change the way you look at price action. Today, we are breaking down how the market actually moves, how smart money leaves clues on the chart, and how you can use those clues to trade with clarity instead of emotion. Welcome back to the channel. Make sure you stay until the end of this video because the last part about entry execution, stop placement, and risk management is where most traders fail, even if their analysis is correct. Let's start from the left side of the chart. Here we can clearly see that price was moving down after coming from higher levels. This tells us that bearish pressure was dominant and sellers were in control. The market was making lower highs and lower lows, which defines a bearish market structure. At this stage, our mindset should always be trend following, not prediction based. As price continues to move, we notice a key moment where the structure changes. The market breaks a previous lower high and starts moving upward with strength. This is what we call a market structure shift, or MSS. A market structure shift is one of the earliest signs that the previous trend is losing control and a new directional bias may be forming. This does not mean we enter immediately, but it tells us to adjust our bias. After the MSS, price creates a strong bullish displacement. This impulsive move is important because it shows real participation from smart money, not just retail noise. Following this impulse, the market pulls back, and this pullback is where we focus our attention. The area we identify here is the order block. An order block represents the zone where institutions placed large orders before pushing price aggressively in one direction. A high-quality order block is usually formed after a valid structure shift and before a strong expansion move. That is exactly what we see here, which is why this order block is significant and worth marking. Now, before price returns to this order block, the market creates inducement. Inducement is a deliberate move designed to trap traders who enter too early or place their stops in obvious areas. It creates the illusion that price will continue in one direction, while smart money is actually preparing for the real move. Inducement is critical because it provides liquidity for institutional entries. Looking at the chart, we can also identify sell-side liquidity resting at the lows. The market has already taken this liquidity, which tells us that sell pressure has been absorbed. Once sell-side liquidity is collected, the probability increases that price will seek buy-side liquidity next. If we now look above the market, we can clearly see buy-side liquidity resting above the highs. Markets are driven by liquidity, not indicators. Price tends to move from one liquidity pool to another, and this gives us a logical target rather than a random take-profit level. Now, everything aligns. The market has shifted structure, a valid order block has formed, inducement has been created and taken, sell-side liquidity has been swept, and buy-side liquidity is resting above. This is not coincidence, this is a narrative. Our entry plan is simple but disciplined. We wait for price to return to the order block and then wait for confirmation. We do not enter blindly. Confirmation can come in the form of lower timeframe structure shifts, strong rejection, or bullish displacement from the order block. The entry is executed after confirmation. The stop loss is placed below the order block with enough distance to avoid being taken out by wicks or stop hunts. This placement protects us while keeping risk controlled. The target is the buy-side liquidity above, because that is the most logical destination for price. Risk management is what keeps us in the game. Never risk more than a small percentage of your account on a single trade. One good setup means nothing without consistency. Protecting capital is always more important than chasing profits. If this breakdown helped you understand the market on a deeper level, make sure to follow the channel and watch the next video, where we'll continue breaking down real charts using smart money concepts step by step. Follow for more, and I'll see you in the next video.